Market Hawks, where we stalk the market. We're just here to pretty much give you a little financial gain so they can stop running a financial train on you. A lot of you don't want to hear about investing or don't take it seriously. Going into the future, it will become essential. It will be a necessity. Now, lately, it's been different events going on in the market that some people may not be aware, a lot of you may be aware. But the market has been up and down and choppy because giving you the basics of how things work. We're going to get into the basic of stocks. Stocks are pretty much assets. When you break it down to the smallest layman terms, it's as if you own a percentage of the company or you own a percentage of a corner store or whatever it may be. You own that percentage, and when that business makes money, you make money. That's basically what a stock is, an asset. Then you have bonds. Bonds are pretty much debt. It's just like your family member or your friend or someone that you lend money, and then they owe you that money back with a little interest on it. So that's the basics of stocks and bonds. In other words, a stock is equity, a bond is debt. But what I want to talk to you guys about today is what's going on in the market. And it goes into bonds. That's why I wanted to break that phrase down to y'all very quick to understand the basis of stocks and bonds. The markets have been up and down and very volatile because you have several things going on. You have the 10-year yield, which is a bond that's issued by the government. Then you have the machines. We'll get into the machines and we'll get into Trump too. But the 10-year yield is a 10-year bond that's usually issued by the government. And it's back, and it's been going up. It's been rising. I think it's at maybe 4.7%. And when you're dealing with investments, you want to deal with smart money. You don't just want to put money everywhere to say you're investing. You want to make smart decisions. And what investors are doing is a level of uncertainty. And when there's a level of uncertainty, you will see it in the behavior of the markets of how they shift asset classes from stocks to bonds to crypto or whatever it may be. But since the 10-year yield has been rising, it's been more favorable to the investor. So what they're doing is they're taking that 4.7% or possibly if it go to 5%, that's more of a safe investment, meaning that it's no risk. You can call it no risk. So what they're doing is shifting asset classes. They're leaving stocks, which are equity, and they're rolling into the bond, the 10-year yield. Whereas though they get a better, safer return because they're dealing with large amounts of money, billions of dollars, some trillions of dollars. So that's causing stocks to go down because they're selling their stocks and they're going to the safest bet at this time because there's uncertainty. The reason why there's uncertainty because Trump is coming into office and they want to see that the laws and the legislation that he implements, that legislation dictates how corporations thrive, how investors make their decisions off of those particular laws. And that's what they're waiting to do. They're waiting to place their bets because they don't know right now. So there's uncertainty. Then you have what I call the machines. The machines is you have institutional investors, which will be hedge funds, which will be mutual funds, which will be investment banks, pension funds, anything of that nature, large entities that's dealing in the market. And they have, some of them have high frequency trading that trades within milliseconds. And they can go in and intercept your investment or your trade and sell it back to you at a higher price. So that goes on. Then they have algorithms. They have computers that already is programmed to automatically buy and sell assets according to the data. Whatever the data is, that computer will download that data and it will make the decision that they have already programmed. So sometimes the data comes out and it's not favorable, the machines will start selling off and shifting asset classes. So you're seeing that. A lot of times I'll say the machines got a hold of the market. So you'll see heavy sell-offs because they have algorithms that automatically shift the asset classes. And sometimes you'll see the market rise because in the same breath, they'll come back and buy asset classes like today. The stock market rose on CPI was better than expected, so it allowed the market to rise. Then with Trump policies, they're waiting. So we have three events. We're looking at the 10-year bond. Assets are being shifted from stocks to bonds, a safer bet, a safer return, smart money, uncertainty. Then you have the machines that's collecting data from the institutions that's moving the markets. And then you have Trump policies. So that's what's going on to give you an idea what's taking on the markets. And I want to leave you with a little something I gave y'all before. A company, it's called Geo Group. Geo Group is a private prison, and they have aligned themselves to already be in a position to possibly get profits out of Trump coming in. There's going to be a lot of deportation, a lot of locking up when it comes down to immigration, different things of that nature. Right now, they're catching a little heat because they caught a lawsuit for how they was dealing with different inmates. But in the future, I see this company being profitable. Now, I may be wrong, but I'm never in doubt. I think this is a good play. It was up today. It's a pretty strong company. The balance sheet's pretty strong. The sales are consistent. I looked at the revenue. So I'm more of a fundamentalist investor, but